In today's video, we're going to show you how we use short-term downtrend lines to help us identify low-risk entry points in stocks. And as always, the stocks we are looking for are typically within 20-25% of a 52-week high that have recently pulled back into support, that are trending sideways in a tight range. So when we're scanning, we use a simple downtrend line break to let us know that a stock might be ready to start its new uptrend. And before there's any downtrend line break, we'll just pass on the stock and keep it on our watch list, but it doesn't move up to our top tier watch list until it can break that downtrend line. The chart below is of WDAY, and we're going to show you an example of recent price action in WDAY and how we waited for the downtrend line to break and then our entry point. So in the example here on this chart, we have WDAY currently in pullback mode. Now you don't know that. If you're long WDAY right here, you're thinking it still could go higher. It breaks down below the 20 MA and the 50-day MA, and now you know that something's wrong. So WDAY is pulled back. Is it a buy? Well, it's broken a short-term downtrend line here. Now one could have seen this break of the downtrend line as a potential buy entry as well after an undercut of the 50-day MA, and that's fine. But once that stalls out and fails, you then have another pullback in place. So this stock's basically on our watch list, and it's just something we're looking at, but we're not ready to put into our top tier watch list until it breaks this downtrend line now, as it's been basing out for several weeks. So WDAY breaks its downtrend line, puts in a few higher swing lows in the process of doing that, and at this point right here, this is on our top tier watch list. This is something that's broken its downtrend line, has been consolidating for a few weeks, and is now in a tight trading range above the 50-day moving average. And on 7-Eleven, we placed WDAY as a potential breakout entry in our newsletter, the Wagner Daily. And on 7-Eleven, the setup triggered, but didn't follow through immediately. The next day, though, it did follow through. As you see, it went sideways for a few days and then has pushed higher, broke out above 70 last week, and now is trading in a tight range. We still own WDAY from our 66 entry and change. But this is how we use downtrend lines to clue us in on when a stock might be ready to break out after a few weeks of corrective price action. Thank you very much for joining us, and if you'd like to learn more about our style of swing trading, you can visit our website at www.morpheustrading.com. Thank you for joining us, and we'll see you next time.